Right now, I'm going to go through a company here. I've chosen because they have every single scenario possible happening. So this is a great demo. Not all your businesses are going to look like this. As you get into retail, brick and mortar, restaurants, they're a lot cleaner. This is an e-commerce company providing a service. And I've chosen this one, like I said, because I can go through every concept of what the product does, because you name the problem, the good, the bad, the ugly, this merchant has experienced it all. So when you first get into the product, it's going to land on the dashboard, and the date range up at top is going to be the current month. At top, you can see the graph of their sales, their declines, and their returns. Returns, you'll notice over here, is made up of refunds, reversals, and chargebacks. In the industry, that is a return. Anything where money went away or a sale was canceled is considered a return by the industry. So refund, chargebacks, and reversals, again, reversals are voids and cancels, with 13 out of 14 categories being forced on the merchant. That's all money going back. Those are all subsets of a return. Successful are obviously sales that are going to be funded. So these could be impending or a funded sale. Either way, if it was settled, then that's showing if it's successful. And then obviously the stuff that is denied, the declines and errors are here. Those are in the green. What you'll notice is their green is almost equal to their blue, their sales. So on a daily basis, you can see it gives them the count and the dollar amount as we go through here. I'm going to show a couple tricks with this stuff up here at the top. So one of the days, for example, if this merchant was looking here on the 2nd, they declined more transactions they successfully did. If they want to look at that date, they do not have to go to the top and filter. They can just click. The product automatically goes out and then goes to the 10/2 date. You can see by hour what's going on, how they did their sales, how they're running them, and you can see the declines, sure enough, are pretty high during that day. I'm going to go back and I'm going to pick a quarter so I can show you some trend lines. So we'll pick Q3. All right, what we're looking at here is Q3 of this year. This is all real live data. This is in here by weeks. We always take it to the smallest granular level so that you can see the spread and you can see the up and down trend. When you see a yellow line go below the line, that is due to chargeback reversals. They got back more money than they gave back in all the other returns. So during week 35, chargeback reversals saved them. Now, one of the things they can do is change the granularity. If I change this to month, it's just going to pick these 3 months, and you'll notice it's just way more thinned out because I'm just looking at month 7, 8, and 9. So I like to look at it in a lot more detail. And again, if I click on any single one of these numbers, it would take me to week 33. And from week 33, I can go into a day. I can then go into by hour. So I can just keep going in and just drilling down, drilling down, drilling down. Now, the reason I chose a quarter, or I could pick year to date if I wanted, is to show you how you can see the trends of what's going on with the merchant. So once I click on a line, you can see I've got a trend. And for the quarter, what you'll notice is this is sales, and their sales are going down. Well, what we hope then is following that, normally we want to see sales going up, but if they're going down, we want to see declines and errors and refunds also going down. What's a bad trend is if we see sales that are decreasing while refunds and declines are increasing. So let's see what's happening here. I can click on declines, and you'll notice the declines are also going down, but not at the same pace as sales. So sales are not decreasing as fast, declines are not decreasing as fast as sales, which is not a good sign. It means they're doing more and more bad transactions. And I'm going to show you where we can trend this and see it. Now, part of the reason I'm teaching this dashboard, the dashboard is for owners. It's for accountants. It's for anybody in that business that needs to quickly look at the state of their business in regards to the cash flow that's happening on their credit card business. And for most businesses we talk to today, credit cards are 100% of their cash. We can do the same thing. I can take stuff off and we can just look at declines. Returns are always such a small percent, it's easier to see them on their own. And again, that dip is due to chargeback reversals during that month, or excuse me, during that week 35. Click back on all, and then it just does an overlay of all of them back together. Now, one of the things you'll notice is I change these dates up top. It is not changing this processing limit. This is always where they're at in the current month. And because we're in October, this particular merchant is at 56% usage on their credit limit, which is set at $1.3 million a month. Now, at the way they're processing currently, we barely just hit the halfway mark, yet they're at 56%. So they are on pace to go over. The reason why we show this is twofold. We can also tie to competitors, companies like CMS and ProPay, WorldPay, etc. And when we do that, 80% of the industry, if you go over your credit limit, that company can legally take your money, and most of those companies do. I've been a CFO I've been doing accounting for 28 years, and I've been in upper management accounting doing CFO work for 24 of those 28. I also have spent 22 years consulting for some of the largest accounting systems. A little company known Microsoft, I consulted for them independently for 15 years. And I consulted for Oracle Financial for 7. So I have sat in front of thousands of companies doing this work for them to create this product, as well as being a CFO and needing this for my own companies. ProPay and CMS are the most infamous, particularly here in Utah, for taking your money when you go over your limit. So it is a reality. We do not do that as a processor. However, we have 3 bosses in the industry. Our first boss is our sponsor banks. Every transaction has a bank behind it, and we have to move that money to that bank in order to get it to the merchant. That bank is one of our bosses, and they set rules for us. The next boss is our platform/network we have chosen, which is the TSYS Global Network. They can trump what we're doing. And then on the very top of all that is the card brand, mostly ran by Visa and MasterCard. If they don't like something, can go out and block a merchant. They can up their fees. They can go out and force us to shut somebody down. So even though we choose to do something, doesn't mean that we don't have 3 others that can trump us and make us do something different. So we track these dials so that we can go work with these clients to make sure they're within their limits and they're not giving free money to the industry, and they're staying within the limits to keep a bank comfortable. So one of the things you'll notice, I pulled up the quarter, but I've still got then his historic. So because we know they're going to go over the limit this month, what have they done historically? Well, last month they went 107%. So they're going just slightly over. We can look at August, 106%. June, 97%, so a little bit below. May at 99. April 48. So they're definitely growing and doing more and more sales. That means we need to revisit their credit limit, and then Preston and his team need to work with them to go out and either get them another mid or increase the size of their credit limit so that we don't get trumped by the industry and forced to either shut them down or put them on a reserve or higher fees. So this does matter and makes a big difference. The last company I worked for, we were with Stripe, CyberSource, CMS, and ProPay. We grew our sales in 1 month from 100,000, which took the business about 2 years to go from tens of thousands of dollars to 100,000, and ProPay had our limit at 100,000. The next month we grew the business to $1 million, and ProPay took all $1 million from our company. I had to legally fight them to get the 100,000 out of their pocket so I could make payroll and pay commissions to agents. And then it took another 2 years to fight them for the other $900,000 they took, all because we went over a limit, guys, a processing limit. They end up giving half back to us. I no longer obviously work for that company. To this day, that was 4 years ago, and ProPay is still sitting on that $400,000 they refuse to release. So this is a reality. We then went to Stripe. Stripe the next month when we went from 1 million to 5 million in sales, and they took 4.7 because they set our credit limit at 300,000, but told us we didn't have a credit limit. We ended up having to sue them. They took $1 million penalty, $400,000 in fees, and wired us 2.7 million out of the 5 million we did, all because we went over a credit limit, guys. So this is a reality. And these merchants, and you need to be aware that when somebody continues to go over this limit, there are repercussions. These next are stats, and this is fun stuff, and it tells a story. We have the historic of where they sit on average sales approved, their declines, cancels, refunds, and chargebacks. Now, one of the things that historically typically happens in C's, and I'm going to jump to just 1 month here. So I'm just going to go to last month. So during this month, they have a recurring product, or their average ticket equals what they do historically, with no surprise there, because it's a recurring product and they always charge the same thing month after month on a 3- and 5-year contract. The declines for the time period came down a little bit to historic, but cancel sales went up a little bit. Refunds went way up. So you'll notice it's up by almost 8.5%. From their average refund being $84, it went up to $91. So they're giving back more money. And the chargebacks went up slightly by about just shy of 2%. So they can see for the time period selected, how did they perform towards their historic numbers? Now, one of the things you also note is that in this case, it's rare that their declines are less than their sales. But with almost every merchant we look at, declines, cancels, refunds, and chargebacks are almost always higher than their average ticket. There's a story to that. The higher your price point, the more likely somebody can't pay you, and also the more likely somebody's committing fraud and theft against you. So you'll notice the chargeback is quite a bit higher than their average ticket. Their refund is almost double their sell. So the person who's getting a purchase from you is purchasing higher than the normal person and then asking for their money back. On both cases, a refund and chargeback. Now, at least if it's a refund, you can determine if somebody got the product, if there was an issue, did you ship it, did they consume the product or service. On a chargeback, they're forcing that by going to the bank and not talking to you as a business. And stats today show that 85% of all chargebacks are cardholder fraud. So I'm going to restate that another way. To give away my age, when I grew up, all through school and college, we were taught the customer is always right. I'm going to use some colorful language here. That is bullshit today. Your customer is trying to rip you off today, and the customer's not always right, and you need to know who they are and how they're performing for you, or you're going to get screwed as a business. Guys, 85% of all chargebacks are cardholder fraud. The cardholder is purposely trying to screw you. Now, that's called theft in the industry. The fraud happens on declines. The theft is happening on chargebacks. With gift cards, virtual cards, and prepaid cards, the fraud in the industry over the last 5 years has quadrupled. And they're predicting in the next 2 years that it's going to grow by another 400%. In the history of finance in the world, since the inception of this earth, there has not been a more fraudulent product for finance in the banking industry than credit cards. That is why they try to go out and have an ABS product and PCI compliance and the CB2 code and all the things they think they're trying to do, the chip readers, etc. The problem is they've created so many fraud checks that what it's doing is actually creating false positives, and instead of blocking fraud, they are blocking more good transactions than it is blocking bad. At a retail level, 3% of all denied transactions, or excuse me, 3% of the transactions that are happening to your company that are denied are a false positive. That is 17% of your e-commerce. That's a high number. You're losing a lot of sales because the industry doesn't know how to appropriately fight fraud, and it has too many fraud products. What makes that even worse is now when a company chooses on its own to use an Ethica, a Verify, account, because now you're using a third-party product, a chargebacks.com, a chargeback 911, now you're making the problem even worse because now you're using an industry product, an outside or third-party product, and these companies now pay a lot of money and have even more problems blocking more good transactions than they're blocking the bad. Ultimately, it's the responsibility of the business to know its customer. This is an indicator and tells a story. How are you to historic? And on the money that isn't working for you with some fraud in here, some theft, and the money you're giving back, are you giving back more than your average ticket? Now, one of the things it also tells you, if I picked another company where this is higher on the declines, etc., that means your sweet spot for your company, you're right in the $55 range. A company we were demoing a couple of days ago, they were pretty close to this. Their average ticket was about $60, and their average decline was almost $100. Their sweet spot has been $60. You have the right to throttle yourself and say that you will not sell an order above $60. You will decrease the amount of declines. You will decrease the amount of fraud that happens against you. And your policy can state, once we have a history with you, then we can increase that credit limit. When I started in business 28 years ago, that's the way business was done. People applied for applications and how much accounts receivable and credit they could have, and you actually gauged how much you'd sell based on the credit worthiness of a business or a person. Today, everybody's thrown that out the window and says, well, if they give me a credit card, that always works, right? That is such a false, bad way to run business. All the credit cards don't work. As you can see by the green for this company, you'll notice in this time period, they bounced almost as many transactions they successfully completed. When you have one out of every two transactions not getting funded, that's not a good story. Now, the next important thing to note on here is days to settle and days to fund. Now, they have a very low time to settle, which is good, which means they are capturing and batching out their transactions on the same day they're authing it. So it's almost always happening within a half day for them, which is nice. But you'll notice the days it takes to fund them, the difference to complete a transaction and see that in their bank account is typically pretty close to 2 days. That is a short amount of time, and that's actually a very good number. So this is a good stat for them amongst all the ugly. With almost the entire rest of our portfolio, that is 1 to 2 days up here and typically 3 to 4 days down here. So these guys are moving fast. They batch out very frequently, and they're just running at all times, and it shows and reflects in these numbers. Now, what this also means is this is what it takes to complete a transaction right here. Almost 2 days, which means if they go in and they look at yesterday, guys, the transactions will not be completed. They're going to be in a pending status because they have not gone through all the processing steps. A client like BYU, it takes them on average almost 9 days to complete a transaction. So if you're looking at anything within the last 9 days, it is changing and changing and changing because it takes 9 days to complete that transaction. So in order to go out and see my completed transactions, I have to look in the product at least 2 days ago, because if I look within the last 2 days, those transactions are still processing, and the statuses and updates will continue to change real time in our product, which means it's not finished, the journal entries aren't done, and you still have moving components. So this gives the knowledge of how long it's taken before they can see a completed transaction. One of the things we've added is a window down here we call the top 8. These are top 8 issues that are affecting, one, their rates and the ability to have successful transactions. These are just in here by alphabetical order and not priority order. And you can see the different topics here of what they can look at and see, is this a problem for my company? So the first one we're on right now is ADS, which is the address verification check. There is a lot of misunderstanding around this, so I'm going to clear up some of that stuff. There are two parts to the ABS. So on every transaction, an ABS check is done whether or not that merchant participates in that process at the time they're authoring a transaction, either through a POS terminal or their electronic gateway like an authorized.net or an NMI. You have the ability to take that option off and say, I'm not going to send this through an ABS check. What that means is if a transaction fails an ABS check and there's no match and you don't participate, you'll still get funded on the transaction, but the industry is going to downgrade that and they're going to penalize you and they're going to increase your fees by an average of 80 basis points. That's almost an entire percent. So it's extremely expensive to be penalized and not run through the program. But you get more transactions to go through because you're not stopping something for not passing the ABS check. But again, guys, the industry still runs it whether you not participate. And if you did participate, it's a penalty. It means higher transaction fees. If you do participate, then they will block transactions that don't pass this check. For most businesses, that is detrimental and affects their sales. The industry at that point can still determine they don't like what you do, and they can still penalize you and still downgrade the transaction. So you could have two things happen. My recommendation to everybody is to always turn that filter off and not participate. It's actually better to just pay the penalty and have more transactions complete and go through successfully than to participate in that program. It is a faulty, very bad program. My first company when I began my own billing company, was a company that did about 5 million transactions a year. They were fairly small, a $50 million a year company, and they had a ton of bad things happening to credit cards, and their collections rate was under 50%. They hired a professional biller who couldn't get it over 55%. I came in, put in this product, and I took their collections to 85%, and I lowered their fees on a monthly basis by over $250,000 a month. Now, the first year that I took over their stuff, they were participating in the ABS check, and 65,000 transactions had failed the ABS check, and they did not get funded. I immediately went on and turned that off. And the next following 12 months, only 4 transactions did not get funded due to ABS reasons. Guys, they had 65,000 transactions go through in 1 year because I turned that off. Their average ticket was $3,500. It makes a difference. Now, next thing to learn on this is there are 4 networks in the industry, but there's only 2 loops or 2 rails. Every credit card has to go through the rail of Visa or MasterCard. But the 4 main networks at a brand level is Visa and MasterCard is one network. They work through the bank, so it's really a banking network. Discover, who runs through a company called Novus, who participates in the bank but still runs its own network. And American Express that does not run through the banking system, but they began to add programs like Blue, etc. So it's a fake way of doing it, but American Express is also its own network. So every time there's an ABS, they each have their own results, but Visa and MasterCard, because they're putting it through the looper rails, can trump what Discover and American Express said. So you'll notice sometimes they disagree between the 2 of them. So in this case, for this particular merchant, you can see how many they have problems on. They had 4,389 occurrences where they had no match at all on their ABS, which is bad. They have almost another 4,000 where only the zip code matches, which means they passed half of it, but the address they have is bogus. 2,200 times, that system was either unavailable or they're trying to run it on a foreign card. Now, this company does not do foreign transactions. They're here domestically, but somebody gave them foreign cards, at least 2,200 of their customers. And so the American system doesn't know what to do with these foreign transactions because it didn't get run as a foreign card. It's being run domestically. on a card that was issued by an international bank. You have some retries. Now, 480 times, you'll notice it was passed by the Visa Master Network, but you'll notice that American Express says, hey, hold on, they didn't even send data in. How did you pass this when they didn't even pass the AVS information? So American Express is disputing Visa MasterCard, but these guys trump American Express. You'll notice on the Discover, on this case, on 309, again, Visa MasterCard said, hey, it matched, and Discover came back and said, no, it didn't, only address matched. The zip code's bogus. So they don't all agree, guys. They're running it different ways, and they cannot come to an agreement between the four brands. And you can see it happening right here. But as a business, it doesn't matter. You have to fix all of these if you want to optimize your fees and not have downgrades, and you want more transactions to get funded. Now, one of the coolest parts to this and helpful is an American Express card, because the other three networks, Visa, MasterCard, and Discover, only do an address and zip code verification. American Express checks the zip code, the address, the customer name, the phone number, and the email tied to that transaction. This allows you, this is some heavy fraud stuff in here. If your card, that name that you put on that transaction comes back from American Express and says that it did not match, you may have somebody who stole somebody's card and knows their address, but used their name. That non-card match means American Express saying, this is not the card holder to the card. You gave me a legit card, but it's not the real person. So American Express gives you a lot more intel than the others, but you only get that, obviously, if the card was ran as, or is an American Express card. So you're not going to see that information on everything else. I'm going to jump through just a couple more, and you guys can play with these later. A bump fee is the downgrade reasons provided by the network as to why they are downgrading the transactions. So you'll notice that these guys have a heavy portion, 20,000 in this category, 9,400 here. Literally almost everything these guys are processing has 1 to 3 reasons why the industry is downgrading this transaction and charging them an average of 80 basis points more on their fees. Now, here's an important concept of fees. The industry this year announced its highest fee increase in the past decade in this industry. That first increase was supposed to be in April, but due to COVID-19, the industry delayed and didn't do that first change until July 17th. Guys, they raised 25% of the fees in the industry were increased in July. They just did the second portion, starts today. Where I'm going with that is there are two things. When you guys are pricing the product for customers, interchange is not controllable. 96% of our transactions are being downgraded by the brands and the networks, which is increasing the fees to the merchant. That is not us, guys. We are not increasing the fees on our merchants. It is the brands. It is the networks. It's the First Datas. It's the Globals. It's the TSYS. It's the WorldPays of the world. They're the ones that are increasing the fees. Now, when a customer comes back and says, hey, my fees went up, absolutely, it's going to go up twice this year for everybody across the board because the industry just raised hundreds and hundreds of interchange rates. So, of course, everybody's fees are going up. And then when you have downgrade transactions, which is an abuse by the entire industry, of course they're going up. Now, there's two parts to this. Part of this is also the behavior of the merchant. They are responsible for 50% of the increase in fees because of the behavior of how they're running their business. In this case, you'll notice these guys are not entering their transactions through a terminal. So you have invalid terminal entry. You have them keying it in. Every time you key enter a credit card, that is an instant downgrade in the industry. No questions asked. So when you're looking at this, most of the reason why these are downgraded, guys, is because they're not using terminals. So they either have a couple choices here. Accept that your fees are not going to be street rate or the rates we quoted you unless you get a terminal, Otherwise, you have to accept that your e-commerce you're doing it online. You're not validating a card through a swipe for a mag stripe or through an EMV chip. Therefore, you're going to get penalized on every transaction. That is not us, and we have no control of that. But the fact that now merchants can see, and we're telling them in full transparency what the industry is doing, they can see if there's something in here behaviorally they want to change or can change. Not everybody can, but then that means they need to know they are not going to get the rates they were quoted. You're going to get downgraded on every transaction. We quickly in here bring them into their chargebacks, and then we're going to go through the details. Again, this page is just to show them in a quick summary what they are doing as an organization. So you can see these guys have a lot of chargebacks. Again, we're looking at 1 month. I'm looking at just last month. They had 90 canceled orders. They had 83. Now, any of these where it says multiple two, I can click on that, and under the canceled orders, there's 2 reasons the customer stated. 87 said they canceled the merchandise, and then 3 people said that these were that it's what they're calling it, claims that the goods and services were canceled as well. So you can see what the industry says and what the customer writes on the way that the bank deciphers that. A lot of times it's very close to each other. So you have 83 where on the recurring product for this service they provide, people said, I've canceled that. So 74 directly said that. 9 of them said, hey, I've attempted to cancel and I can't get them to return a call or whatever. So you can see what the customers are saying. This is good information here because this is a complaint by the customer. This is the code by the industry. Now under here, there's 15 where they said the product wasn't provided, but that's split up into 4 main ways the customer described that they're not happy with the fulfillment. So that's what these little arrows here mean when you're seeing a 4 and the ability to get to the customer note. We then go through declines and the major reason. Now this is rare because do not honors now dominate this industry. So this is actually a good stat for them. If you're going to have a decline, you want it to be insufficient funds because it's the easiest to solve and it's the easiest to get funded. And it also means you have a good financial instrument. It just didn't have money on it. So the card is valid. They just don't have funds to cover the purchase. When you start getting into these others, these are all invalid cards or cards that have to be fixed or replaced. So these are the easiest to deal with, and you want them to be the top reason for your decline. So this is actually a good stat for them amongst the bad. We can get into the error codes and what's going on, and you can see these guys have a lot of errors. The errors are always created by the way their terminal, their software, or their gateway put the transaction in the industry. So these are not being caused by the industry. They're being created by the software and the actions of the merchant. So they have quite a few transactions. If they fix these things, they can get those transactions to go through. The transaction will go in, but it doesn't mean somebody has money on their card, but at least it will get to that step. So this is airing out before it can even get to an acceptance or decline. We have rejects and funding, and during this time, none of their deposits were rejected. If so, we tell them the reason why and what they can do to stop that behavior on their side. Skim cards won't show up for these guys because they're an online retailer. Now, if you're wondering how frequently a skim card happens for retailers that do have a terminal and they're either swiping or chip reading that card, guys, it's 1 in 100 credit cards. The opportunity to me is the most important part of this entire page for the business. For the accountant, it's going to be this accounting tab. For the business, it is the opportunity page. This thing shows how many transactions they're doing by category. So they have 23,000 transactions at a cost of $1.1 million. Here's the average success rate across all industries. So some industries are better at collection, some are worse. This is an average across all portfolios, all industries. This is the odds you can collect on each of these categories. So this tells you the likely amount of what you could get. So out of these 23,000 transactions of 1.45, there is actually all errors and ability to go out and fix and bring more money in. $669,000 is what's likely based on historic rules, ability to collect, ability to contact a card holder, the ability to fix that card and it still have money, etc. You're looking at a mixed ratio for this particular company for the month of about 58%. That is high. Guys, that's almost $700,000 that, given some behavioral changes, and these guys actually attempting to go after it, could have put in their pocket. Now, when you're looking at the dashboard and their successful sales were 1.6 and they have another 700,000 they could put in this, guys, that's like a 40% increase to their top line. It's not about going out and getting more sales. It's about going out and actually having success on the business you already brought to the table. Of that 1.4, again, the opportunity is 1.1. Some of it is just dead and you can't go after. A stolen card, a lost card, a pickup card you can't collect on. So that's not in an opportunity. So at that 1.4 is an opportunity of 1.1 of what your likelihood to get that if you were to actually try is almost 700,000. This is so material. Companies want to go beat us up over fees. The fees, guys, for these guys during this time period, their fees are $15,000, and they want to beat us up on a few $100s in fees they don't like when they're walking away from $600,000. If you're not hearing me, let me say that again. The opportunity and the going out and fixing your broken transaction should dwell and be at the top of your totem pole of priorities of what you're doing. This is not a fee problem. There's a fee problem in the industry that you can't control because the brands aren't going to stop raising their rates and they're not going to stop downgrading transactions. You can't control that. So should you be fighting the industry over a few dollars in fees, or should you be going after the $700,000 you didn't collect on that you could? Because half of it's your behavior and your mistake, and the other half is the broken industry. But we're giving you the details now to go after this. Down below is all the download details of everything above. Here's every single transaction and what you can go do to fix it. They don't have to go find it. They don't have to wonder. Here they all are. You can click on details and here's everything about that transaction. Why it didn't go through, what your fees were, who's the customer, did you give us an invoice? So these guys obviously didn't submit customer information that came in through the networks. This is how you entered it through the industry, how it went through the terminals and whether you followed the rules or not. This is then how your transaction happened at the bin level. The industry, you'll notice here, and I'll go through this later, they didn't even run a bin checkup on this. And so the industry failed to do its job right here. This is a MasterCard debit card. This is the level, and it's a prepaid card. This industry right here should never take a prepaid card. This is a problem for them. You're on a 3 to 5 year recurring product, having to take a prepaid gift card. Guys, that has $50 or $100 and will never work again, but that's what they put somebody on a 3 to 5 year contract where the average monthly bill is $55. So somebody gives them a $100 gift card, it works the first month and then fails for the next 40 or 59 months out of a 60-month contract. They have to replace this card. We're giving you all that intel, and you can download this and bring it wherever you want. Upload it in your systems. We give you the API if you want to take it straight into your system. So this is brand new on the product. We then also show if there's been collection efforts by them. So out of 23,000 failures, these guys actually attempt to recollect on every transaction. Their success was 162 successful collections on almost 23,500. That's pathetic. Now, it's not their fault. It's pathetic because of the industry. They're doing the best they can with the information they're being provided, but prior to our product, nobody's given the intel and knowledge, so they're ignorantly running these 23,000 cards over and over to only have 162 go through. To have an opportunity on 1.1 to get 700,000, you got 11? 11's better than nothing, and at least they're trying, but you can see that's very low success. They're not making the right changes because they lack the intelligence prior to this product. We then obviously take what was gross, less what was collected, and come up with a net. So what they still have remaining to go after is $662,000. That's their true opportunity. Guys, that's 1 month. Annualize that number. We're talking millions and millions of dollars for somebody. Don't come beat me up for $100 each month on fees. You're walking away from millions. I call it the concept of stepping over a dollar to pick up a penny. Why are you walking over the dollars to pick up a penny? Pick up the dollar. It's more important than the penny. In processing, this is where everything starts to come together. Down here's the detail of every single transaction. They put through almost 61,000 attempted sales, of which almost 30,000 failed. So again, half of what they're doing isn't working. And here's the categories of why. In their presented returns, they had 904, most of those being refunds, and a heavy chargeback. These guys have a ton of chargebacks. These guys did more chargebacks in 1 month than our entire portfolio combined for the past 2 years. So these guys have a problem. We're trying to help them address it. That is an ugly stat. You can see also that not everything they're doing was successful. There is declines. They had 33 of their refunds declined. Well, if they don't look at that, guys, what's the problem if you attempted to do a refund and 33 of them didn't get funded for a total of $2,300? The customer is then going to do a chargeback. So not only are you giving the money back, you're going to give back a $25 penalty, and you're going to increase your rate, your chargeback ratio, which increases your rate, your risk, and ultimately puts you on reserve or gets your account shut down. So there are things behaviorally they need to do to save their portfolio. You need to address every single refund that is, or declined refund, so that you can go off and take care of that customer so they don't now do a chargeback. If you're on a skim card, you want to call up and or just refund that sale back because that transaction was not done to the real cardholder. So when the real cardholder sees their statement and they don't recognize the purchase, what are they going to do? A chargeback. So when we tell you there's a skim card, when we tell you there's a refund that was declined, you got to address these issues. So these merchants are creating their own problems by not addressing their problems, and they're creating their problems with the industry. So again, you'll hear me say throughout this presentation, 50% of the problem in the industry is the merchant and its behavior, and 50% is the industry that can't get the data right. Now, when I say the industry can't get it right, guys, today on a transaction, we are handed 4,000 pieces of data for every transaction. We are correcting 1,900 of those 4,000 data points. Now, the industry still doesn't give you enough intel to put it together, so all of our queries, our hundreds of process and our hundreds of queries, enhance that transaction by adding another 1,500 pieces of data. Behind the scenes, what you guys don't see is to every single one of these transactions down here, every single one of these lines has over 5,500 pieces of data. What a business or an account has access to within the reports they can pull from the industry today are less than 20 data points. How could an accountant or a collections team or marketing and sales or upper management ever go on how to run its business when you're being shown 20 pieces of data on 5,500? There's no way they're ever going to run their business or do what we're showing them. It's not possible. So we have put all that together for them. But half the problem means you have to change your actions, your behavior, and you actually have to do something different. Now, I'm going to go through just a couple more things on this page because time's getting limited. So I'm going to start going fast through the other stuff so we can get to, for the accountant and the report, some of the most important also aspects for them. Again, to the entire company, that opportunity page is the most important. That is the most material piece to save their sales, put money in their bank account. What you'll notice here, and this is scary, of the 3.3 million they attempted, 1.4 didn't go through, 46%, giving them a net number here. Then they have the returns, which is just these numbers all here coming together in this reconciliation for them. So their unsuccessful collections then get netted back against them. You come to then a net purchases, net of returns. There's adjustments that can happen in the industry. They can be either a deposit or withdrawal. They did not have any adjustments forced on them during this month. Then you take out their fees, and then they're left with what's going to hit their bank account. Guys, out of $3 million in presented transactions, they're going to end up with 1.5 or 50% of what they tried to collect. That tells you many things. One, this is a scary model, and you better have a high margin on your product. And two is, as you're forecasting, if these guys want to go grow their sales next year by $1 million, you can't go just do $1 million in sales, because $1 million up here is going to be 500,000 here. So if you want to go grow your bank account by $1 million next year, given this number, until you can improve these stats, you better have 2 million that you presented in order to see 1 million that you'll actually actualize. So this begins to allow them to forecast appropriately. It allows them to again make changes and do something different. Declines goes into a lot of detail, where the stuff up above was summary, and a lot of these on the declines and chargebacks are included in the opportunity if there is one. An unknown decline. A lot of the do not honors and hard declines are not opportunities. All the others are opportunities with stuff from chargeback. So again, not everything on this page can you go after, which is why in the opportunity, it's not 1.4, because you can't go after the hard declines. Now, one of the things that's scary and important to note, out of the 30,000-ish transactions, close to it, that declined, almost half of those we knew were going to bounce before they even ran the transaction. Guys, the fees on those were almost $1,000. You want to lower your fees? Stop running transactions you shouldn't run. So now go after the money you can collect and affect your own fees by appropriately running a transaction you should run. Again, you can't control downgrades, you can't control interchange, but you can lower your fees by almost $1,000 a month if you just stopped running transactions that we've told you not to run. Now, on each line, and in details, and again, for time, I'm not going to go through all this, but you can click on the details. You can also slide across the line, and it's telling you which one of these are preventable. So you can go download this, and it tells you where your opportunities are at, which of these are true, false, you're preventable, so that you know, this is what I should have run. Until I change it or fix it or do something different, it's going to keep bouncing. This particular client has some hard declines, stuff like a stolen or lost card, a pickup card that they have ran over 150 times in just the last 4 months. That is 140 times unnecessarily after we told you the first time that that card has been reported as lost or stolen. So where they're again having very little success and only collected on 162 is because every time you're running that lost or stolen card the next 149 times, guys, it's never going to clear. You're never going to get that card to work. It's a bad financial instrument that has to be replaced. Your customer needs to be suspended on its product until they give you a new credit card number. That's how you begin to increase these and see this number go way up, and to go see, guys, your fees come down. They can go and get rid of that number. They're in control of that. That's how you help somebody get fees back. The chargebacks goes through where they're at. Obviously, these guys are in a warning. They're not in shutdown level yet, but they're above their tolerance. So we have a green is okay, yellow is warning, and red is danger of the industry trumping us and shutting your account off. These guys are in a warning. We're working with them, but we've got to get that approved because they're currently now on a match list, or excuse me, a watch list before the match list. The last thing you want your businesses to get put on is a watch list and a match list, because now it's no longer just us as Gold Star Payment Processing and A.I.T Technology looking at them. Once they're on those lists, guys, it is the banks, the brands, and the platforms are all now monitoring your account. You don't want them to even know who you are. So that's not a good thing when you've got 3 bosses above us that are now babysitting us to tell us what we're going to do to your account. We go through the different categories they get. what people are claiming and their new cases. There's always a lag in chargebacks because as the new cases come in, these take up to 2 to 3 weeks to solve. When it's a reversal, they can take even sometimes 4 to 6 weeks. So the reversals that happen during this time period that you see on here are not related to these new cases of the retrievals and chargebacks because these were fought from historic ones and they were then resolved during this time period, but have nothing to do with these two. So hopefully that makes sense. The customers need to understand there's different timings going on here. And down below, we give all that detail. One of the things that makes this unique is to every chargeback and all the details down here, we give you everything about it, and we have automatically matched that to the original order. So you can see the original transaction date, the original auth code, the original transaction information is all here tied to that card, to the original transaction ID. They don't have to guess who's ripping them off or committing that fraud. Again, 85% of all chargebacks are cardholder fraud. So more than likely, 8 out of 10 of these are straight up fraud by your customers, and you know exactly who they are because we just told you. That is one of the hardest things for business and accountants without our product or using somebody like a Chargeback 911 or a chargebacks.com. So there's a couple people that can compete with us in this, but a chargebacks.com and a chargebacks 911 do not have any of the rest of our product. They can help you here and nowhere else. So there is some value by others, but not a complete picture. But you have to go after the chargebacks, particularly when somebody claims you committed fraud. So on the retrieval, they have 5 as just a general, but out of their new cases, 46 of their stuff are people committing are claiming they're doing fraud. In the industry, any undisputed chargeback is an agreement and admittance as a company that you agree with the claim. A company should 100% of the time fight every chargeback, even if they have a good ratio, if it was a claim of fraud. So they're telling the industry, I don't agree with the customer. We did not create fraud or commit fraud. So you want to dispute that to tell the industry you don't agree. So your silence and you're not fighting a chargeback tells the industry you agree with the customer. That's the way the industry reads it. So for the accountant, the most important part is the stuff we talked about at the beginning, and that's the accounting. And the timing, as you saw, could not be more screwy for them because most things do not complete and finalize in the month that it was started. So this is going to calculate not only the cash basis, but the accrual entries. So for all the companies that are accrual, but doing their credit cards and their cash and their revenue as cash basis, which is not legal, finally now has a tool that we gave them the accrual entry to put them in compliance and legality to their accounting laws they're required to follow. The entire world has to follow those rules and laws. Even a non-profit organization has to file taxes and do accounting books. So every single company in business worldwide has to follow one of these 2 rules. So the entries are all done for them. I'm not going to go in detail, but just know that we follow a logic that is the only product in the industry that follows the timing they're required to do and is fully GAAP compliant. GAAP standard for generally accepted accounting principles. So we actually follow the rules of accounting, which the banking industry and credit cards violate 100% of those rules. I can't state that enough. There is 0 statements, bank statements, processing statements, credit card data in the industry today, 100% besides us, violates 100% of accounting rules. That is one of the difficulties for accountants. The timing's on. You're not sharing my data back with me. The data's broken and not good. My behavior has an impact. And then you're not following any accounting rules inside an industry that actually created the accounting rules, the banking industry. So we now have fixed that, and we give everybody what they need to know that actually is those rules, is apples, perfect comparison to their calendar month. This does not exist with any other player inside the industry. The next part is also unique to us and nobody else inside the industry has, and that is the true statement reconciliation. The statements today provided by the industry have multiple problems with them. First and foremost, there is no complete statement in the industry. Every statement is missing 1 to 5% of the transactions and the money that moved that hit somebody's bank account. So when you're looking at a statement, that is not 100% of what happened to you. Therefore, if you're plugging to that number, you're not doing your books right because that's not even all the information. Second part to a statement is a statement lags because the industry is following banking dates and time, and they have to close part of your month early in order to go out and start calculating end of month fees, etc., because the industry is not real time. So the industry stops processing the month somewhere between the 25th and 27th, depending on holidays and weekends. So if you guys hopefully just caught that, where September just ended and I get a TSYS Gold Star statement, that statement is going to be from somewhere around August 25th through a September 25th. So therefore, part of my numbers I'm seeing in September really are from August, and all of my September is still not even on a statement and isn't going to show up until October. You are required as an accountant today to have 3-month statements in order to balance 1 month. I have to have the August, September, and October statements to fully figure out the month of September. That is not our statement. Our statement matches the perfect calendar month. So back to those dates and the rest of the industry, the timing of what an accountant is required to do on a calendar month is a 35% variance compared to the statements and bank statements provided by the industry today. You are not doing an apples-to-apples comparison of the same data set. You're 35% off. Our product is the only product in the industry that we are on to the exact dates of September 1 through September 30th, real time, and we break that statement up into 2 portions because there's 2 moving parts here. There's the reconciliation to your daily transaction, and then there is the bank deposit. No statement is doing that today. This is every single deposit they made by date, and that is not the way the transactions are. Again, guys, your deposits do not happen same day or next day. It's at least 2 to 3 days out on a perfect scenario. And for many people, the delay, like the example we did before we started, it is a full 30 days after the fact of a start of a transaction. And then given end of month fees bleeds into 3 months away from November into January of the following year. So this is extremely revolutionary and different to look at a transaction and everything that happened. You'll notice for this particular company, just on the first, they have so many things happening, it's not funny. First of all, every chargeback on here has its own batch. Each of the transactions were done. So you'll notice this transactions here settled on different dates, and they're also in different batches. So I have sales up here in one batch, the refunds in that same batch. I have stuff that settled on a different date, and then other things, the business cards that went on a 24-hour hold. So I have 3 different batches just for that day before I even get into the chargebacks. So when I get into the deposits for the first, that will start happening around the 3rd, 4th, and the 5th, you're not going to have one deposit for this day. So this day is fully reconciled out. Here's your numbers. You did 5,383 transactions. You submitted 288. You're going to settle 178, less your fees of 10,000. So you're going to get funded the net of those if it's daily fees. Otherwise, you're going to see this deposit is that or today, and the 10,000 come out at the end of the month. So when we go over to the deposits, you'll notice for several days in here, when I go to that 2nd and 3rd and 4th, where that's the stuff from the first, what are you seeing, guys, here? Multiple deposits. In fact, on the 2nd, or excuse me, on the 3rd, I've got 2 deposits and 27 withdrawals. So now I can click on that, and there are the 2 deposits you got. So you're going to be sent 35,000 to your bank and 47 for a total of 82,000. But you also have 27 withdrawals that happened during that same time period for all the chargebacks that are all in its own batch with the federal trace number. So on one day, Guys, in their bank account, they're going to have 29 entries for one day. This is what the rest of the industry cannot explain, and why account pulls their hair out, because they don't know what's happening, how many things go together, what they're tied to. Guys, we just did something that is revolutionary for businesses. To see this amount of detail with the trace numbers and every amount that's going to hit their bank account doesn't exist in the industry today, and certainly not on their calendar month. Now, one big thing to note here, and you'll notice notes throughout the product, this is the date that it hits their bank account. So this funded date here is the date that it's going to hit their bank, but we cannot control when their bank makes those funds available. So hopefully you guys caught that. This showed up on their bank physically on September 2nd, but I can't control when their bank makes those funds available inside their banking account. So we can account for it to their bank. After that, they have to watch for it, because we have zero control once it's at their bank. We have control to get it to their bank, but we have no control inside their bank. And again, to make the big difference, this is when the money moves. This is what they did for their day. And they have this, these people have a lot going on every day. Between, like I said, chargebacks and the different batches and batching out at different times, these guys rarely have stuff in one batch. And this is a reality for most companies. Business cards do not move at the same time as a personal card. It's a 24-hour hold unless you're sending an appropriate tier 1, tier 2, and tier 3 data. And if they don't, it's an automatic 24-hour hold on a perfect business card that will not get funded at the same time as the rest of your transaction. These are rules to the game that nobody's ever told, and reasons why your businesses cannot figure out how to tie their books or ever see one day's deposits and one number at their bank. And as you can see, guys, you don't get one number at your bank. Every day you're getting multiple. But now we've told you exactly what that is. Reports, we still have the one. We have multiple writings, so the do not honor report, their cards that they should not be accepting given their business is coming up. So we have multiple customer reports that will be popping in. The one that is most popular and everybody asks for is a ship, no ship report. So this tells you everything that for this time period you shouldn't have shipped, and the reason why you shouldn't have shipped is if you go into declines, you can see all the different reasons in here. If I go into hard declines, for example, I have 1,004 lost cards that were run during this time period that I should not be fulfilling the product. And when I click filter, there it all is right there. There's all 1,000 transactions to every single card and the date. If you pushed in the order number and the customer, that would also be provided. We can't provide what the merchant does not share. So this is a merchant problem to get this into the industry, and we're working with them so that we can start to give them that information as well. But that's how quickly you can filter. There's now those 14, there's those 94. So now you can go and export those out. Now, the reason why we have a ship sign, everyone says, well, why, if you're telling us not to ship, why do you tell us what to ship? Obviously, if we know what not to ship, everything else is good. That is not true. We work with companies that when they try to match their orders against the ship and no ship, don't even exist in one of these sides of the reports. What that means is you have an order you put into your fulfillment center, you never ran the credit card. The very first company we wrote this for was an $8 million a year company. And when we went in there, guys had actually fulfilled $11 million worth of sales. They had $3 million in shipped product they never even ran the credit cards on. They had no idea. So now when they took their orders and they couldn't find them on a ship or no ship side, that identified the 3 million they never ran, because we're not their operations side. I cannot see inside their CRM, so I don't know what cards they haven't ran. So the beauty of this report is, for that fulfillment center, their warehouse, if you cannot find every order on one of these two sides of the equation, you never ran the card. So from there, I'm going to shut up. There's a lot more I can go into. We have pivot tables in here, the filtering, the downloads. Again, I didn't go into the full extent of all the detail that we provide on every transaction that nobody will tell you about. So again, for every transaction, we tell you all the different fees, and whether it's end of month or whether it's daily. We then tell you everything about that bin and its levels, and if there's a reward, and if it was a business card. We tell you how this went through the industry, if they ran their checks they should have done. So one of the things you'll notice here, the industry they failed in two areas. They didn't do the off card, on the card was not ran all the way, which is an error inside the industry. They also did not look up the bin, which means they guessed, which means they may not have feed this transaction appropriately. TSYS has the cleanest data in the industry, but only do this lookup 20% of the time, 80% of the time for speed to get things to go through the system faster. They don't run it. The problem to that of not running it 87 or 80% of the time where they don't run it, when TSYS guesses what they think the card is, they're only 43% accurate. So 57% of the time, TSYS misdiagnoses what that card and type is, and the transaction tied to the MCC code, tied to the dollar amount and that card brand and levels determine your fees. So when you misappropriate what that card is, then 57% of the time, you're not going to get the right fees because the industry completely